So where do you think the biggest headaches in procurement really come from? The stuff that causes all the delays and payment problems. Well, it's probably not what you're thinking. It's not usually the big, complex deals. It's something much simpler and way more fundamental, the data you start with. So in this explainer, we're going to dig into how getting your vendor and material data right is the absolute bedrock of the entire procure-to-pay cycle. It's critical, but honestly, it's often totally overlooked.
All right, so here's how we're going to break this down. First, we'll tackle the main problem. What happens when your data is a mess? Then, we'll get into the solution, piece by piece. We'll start with automating how you bring vendors on board, then add that all-important compliance check. After that, we'll see how the same ideas apply to material data. And finally, we'll wrap it all up by looking at the huge strategic wins you get from doing this right.
Okay, first things first. Let's really get to the heart of this. Why should you even care about master data? Well, think of it like this. It's the foundation of your house. If that foundation has cracks, the whole building is going to be unstable. It's the exact same idea here.
So what is master data really? It's basically your company's official address book for everything you buy and everyone you buy from. The core details that don't change often. A vendor's legal name, their tax ID, a specific part number. This stuff gets used over and over and over again. And if that core information, that single source of truth, is wrong, well, you're pretty much guaranteeing that every single transaction that uses it will be wrong too.
And this is where the real trouble starts, with this domino effect. A tiny little typo in a vendor's bank info at the very beginning can blow up into a huge failed payment weeks down the road. An incorrect material code? That can completely throw off your inventory counts and your spend reports. The point is, that first little mistake doesn't just sit there, it snowballs.
So where does all this bad data come from? Well, this slide pretty much nails it. For so many companies, this is still reality. It's just a chaotic mess of emails, random attachments, and then someone, somewhere, is manually typing all this info into a system. There's just no single point of control, which makes it a breeding ground for mistakes.
And that manual chaos, it leads directly to these kinds of nightmares. You end up with duplicate vendors, so you're paying the same company twice under different names. You get tax details wrong. You send payments to the wrong bank account. These aren't just small clerical slips. These are serious, expensive business problems.
So how do we get out of this mess? Let's talk about a better way. The solution has to start at the very beginning, that moment you decide to bring on a new supplier. It's about moving from that chaotic free-for-all to a system of structured control.
So instead of a casual email that just says, "Hey, can you add this vendor?" the whole process gets a major upgrade. It turns into a clear, step-by-step workflow. It all kicks off with a formal request that makes sure everyone provides the right info in the right way from the get-go.
See, a standardized system makes sure that all of this critical info gets captured every single time. No more scrambling to find a missing tax ID or realizing you don't have the correct legal name for a contract. The system just won't let you move forward without it. It's that simple.
This chart just perfectly sums up the change. You're basically swapping a process that's built for errors with one that's designed to prevent them. It's really the difference between just crossing your fingers and hoping for good data versus actually engineering good data from the start.
Okay, great. So now we've got the data captured in a nice, structured way. But how do we know this vendor is legit? That brings us to the next critical stage, automating how we trust and verify them. Now this is a really, really important point. Compliance isn't some afterthought or a box you check at the end. It's a non-negotiable gateway. A potential vendor has to pass through it before they even get into your system. This is all about protecting your company from some pretty serious financial and reputational risks.
The great thing is, modern systems can do a lot of this heavy lifting for you, automatically and instantly. It can check if a tax ID is real, scan for duplicates so you don't add the same company twice, and even make sure bank details are in the right format. This stuff slashes payment failures. And you can take it even further. For that next level of governance, the system can automatically screen vendors against things like global sanctions lists and other official blacklists. This makes sure you're not accidentally about to do business with a barred entity, which, trust me, is a compliance nightmare you do not want to deal with manually.
And here's the kicker. All of this automation creates a solid, time-stamped paper trail. So when an auditor shows up and asks, "Hey, why did you approve this vendor?" you don't have to panic. You've got a complete digital record showing every single check that was performed and passed. It's totally defensible.
Okay, so this disciplined approach isn't just for who you buy from, it's also for what you buy.
So let's shift gears and apply this exact same thinking to the other pillar of our foundation, our material and service data. Just like with vendors, every single thing your company buys, whether it's a physical item or a service, needs its own clean, structured profile. Is a box one single unit or is it a case of 12? What's the right commodity code for taxes? If you don't standardize this stuff, you're just creating another mess.
Let's just pause on that for a second. What really happens when one person in your company calls something a half-inch steel bolt and someone else calls it a bolt steel 0.5 inch? What's the big deal? Well, the big deal is huge. This chart says it all. You literally can't analyze what you're spending because you can't group the same items together. You can't go to your suppliers and negotiate a better deal because you have no idea what your total volume is. And forget about trusting your inventory numbers. It's impossible.
All right, let's bring it all home. When you finally solve both the vendor and the material data problem right at the source, it becomes a massive strategic advantage. You're not just cleaning up data, you're fundamentally changing how your entire procurement organization works. And this right here is the main takeaway. This isn't about tackling two different problems. It's about creating one single, solid, trustworthy data foundation that your whole procure-to-pay process can be built on. It's about building on rock, not on sand. And the payoff is real. You can see it right here. Your finance team spends way less time fixing messed up invoices. Audits become smooth and painless. Your leadership team finally gets reports and analytics they can actually believe in. And hey, even your suppliers have a better time working with you. It's a win-win-win.
When you get right down to it, this changes everything. Your team goes from being firefighters, always running around putting out fires caused by bad data, to being strategic gatekeepers. They stop problems before they can even start. Suddenly, managing master data isn't just some boring admin task. It's a powerful strategic control for the business.
So I'll just leave you with this final question to think about. If all these downstream problems, from bad reports to failed payments to audit issues, all trace back to a weak data foundation, then doesn't it make sense that fixing that foundation should be priority number one? It's not just a small tweak, it's one of the most impactful changes a business can make.